So we're looking at the bank and cash cycle today. Okay, once again, you have your study resources. Do remember that you also have the textbook, although the textbook chapters 12 and 13 are not specifically divided into audit evidence per the different cycles. Okay. The outcomes, once again, we would need to understand the characteristics and the nature of the cycle so that we are able to assess the controls in the cycle and perform substantive procedures over the transactions and balances in the cycle. Okay, so the nature of the bank and cash balances are that they are integrated into the other cycles. Okay, the receipt side of the revenue and receipt cycle would then have the cash or bank balances, as well as the payment side. Payroll, we covered the payroll prep and payout, and then investment and financing, both of those cycles, as well as production and inventory. The important balances in the cycle are the cash balance and the bank balance, both of which are current assets that form part of the cash and cash equivalents. Okay, but they are different because the bank balance is cash held at another location, i.e. at the financial institution, whereas the cash balances are held on the client's premises itself. Okay, so in terms of documentation in the cycle, for bank balances, we've got checks and deposit slips, bank statements, bank confirmation, the cash book, and the bank reconciliation. Both checks and deposit slips are not widely used anymore as EFTs are becoming more popular and more common these days. Okay, so you could add to that the proof of payment that comes along with the EFT transactions. Okay, for cash, you've got the cash register reading or the cash register roll. Could have some cash advance documents or cash summaries, the receipts, and then the physical cash count documentation as well. Okay, the bank and cash cycle, the materiality of the cash balances in the cycle would depend on the nature of business. Okay, is cash widely used, or are most of the transactions on credit and then settled once off at month end, or is cash used on a daily basis in more routine transactions? Okay, the risk obviously for bank and cash would then be the risk of fraud, risk of theft is quite common, especially where there are large amounts of cash or daily cash held on the premises for quite some time. Okay, and then also the risk of error in the recording of these cash balances. Okay. Okay, so the controls in the cycle, we have them divided into three categories: the basic controls, the controls over cash, and then the controls over the bank account. Okay, so for your basic controls, we would need segregation of duties. Obviously, this depends on the size of the organization, whether that would be possible, but for practicality purposes, you would need then segregation of duties between the person who receives cash is normally not the same person who would then deal with the recording of the cash transactions, just so that the audit trail could be appropriately maintained, because that person who receives the cash could embezzle that funds, and then if that same person is responsible for the recording of cash, that would then be easy to cover their tracks. Okay, just remember that there are different forms of cash. We've said there could be petty cash, okay, which is just used for ad hoc transactions, the payment of some office refreshments, the taxi fare for the gardener, etc. Okay, or you could have where the business deals with cash, when it's a retail organization, you could actually have cash that is held as float in the till or the cash register. Okay, the till is another name for the cash register. Okay, we would need proper stationery control over all of the documents in the cycle. Okay, not just the physical safeguarding, okay, but the recording thereof needs to be done appropriately, and those registers, they need to be appropriate controls over those registers. For example, if you have a vault where you keep your cash, you need to have a register for every person entering in and exiting out, okay, or the key of the register of the vault that needs to be registered so that the key is signed in and signed out, okay, so that there are appropriate controls and supervision over the cash that is in the vault. Okay, so the safeguarding of the cash or the money, we've said, could be a vault that is applied, or it could be some CCTV cameras or some other security measures in place. It could be a security, or it could be an entire different security company that is employed to handle the cash movement. Think of service stations where there's a large volume of cash, and then the cash is picked up every morning by a different security company and then banked appropriately. Okay, I was once at a client where actually, because of their volumes of cash, what they had done was they had located themselves next, their business is right next to the bank, sharing a specific wall. Okay, so when the cash is banked every morning, there is a drop box, and then the cash is sealed in a bag with the deposit slip, and it is dropped right into the bank's vault through the drop box in the wall. Okay, so that is another means to eliminate the cash movement, and so you ensure the safeguarding of the cash. Okay, checks, they also need to have appropriate controls over. They are already sequentially numbered, but the physical safekeeping of the checkbook needs to be maintained. It should also be treated as cash. So if you keep your cash in the vault, you should also keep, or in a safe, you should also keep the checks in a safe as well. Okay, check payments need to be authorized by at least 2 signatories, and then any check that needs to be executed needs to be supported by the supporting document as well. Okay, any loans to employees needs to be authorized in terms of the policies, okay, in terms of the approved policies, and then depending on the nature of the loan, there could be different authorization levels as well. Okay, for the physical safekeeping of cash, an important control would be the adequate insurance over this cash so that the recoverability of the cash is ensured. Okay, for EFT payments, similar to checks, we've said there needs to be 2 signatories as a minimum for any EFT payment, okay, released by one person and then approved by the next person. Okay, that again, once again, there could be different levels. Depending on the size of the EFT payment, you might have a 3rd level of approval. Okay, and then should internet banking or online banking be used, we need to have all of those password controls in place as well. Password control, logging out of the system, if you are inactive for a certain period of time, a one-time PIN that is generated, the EFT being restricted to one specific terminal, one specific computer, or you have a token. Some banks make use of a token just to ensure that the actual payments are not made by unauthorized personnel. Okay, so for cash controls, every cashier should be responsible for their own funds. Okay, they maintain control over the cash register. Okay, the cash register summaries also need to be appropriately reconciled. If the cashiers work on a shift basis, every shift handover should be accompanied by the cash register reconciliation, so that you accept responsibility for your specific funds at that point in time. Okay, that needs to be reconciled to the physical float on hand, as well as any supporting documentation for what has been paid out or what has been received into the cash register. Okay, the cashiers need to be supervised. There's usually a cash supervisor on the floor, on the premises, that supervise the cashier's handling of cash. Okay, but you could also have some sort of CCTV cameras, or once again security guards in place as well. Okay, an important control would be that, irrespective of the fact that cash could be kept in a vault or in a safe, the cash needs to be banked as soon as possible. Okay, so that there is not a buildup of large volumes of cash, creating temptation for either employees or outsiders who know that cash is not banked ASAP. Okay, so for daily cash counts, we've already said that needs to be agreed to supporting documentation as per the cash register. That is then recorded on a specific cash summary. The cashier responsible for their float signs that summary, and that is reviewed by a cashier supervisor or some sort of supervisor. And then any shortages need to be investigated. It is industry practice usually for organizations with large volumes of cash that should there be a shortage, that is then directly received back from the cashier. Okay, just remember that where there are controls implemented by management, that needs to then be appropriately tested by the auditor. The auditor's responsibility is not to implement the controls, but to test controls and make appropriate recommendations for where there are weaknesses in controls. Okay, so for your bank account controls, the main control there is the monthly bank reconciliation that is performed. The fact that the reconciliation is performed is already a control, but on top of that, that is then reviewed by a senior official, okay, and it is prepared by an independent person who does not deal with the receipt and the payment of cash, okay, for that segregation of duties, and appropriately then reviewed by a supervisor or senior personnel member.